Hello, you are listening to the all-new Effin Tech podcast in partnership with dLocal, the show that goes deep into the stories, the challenges and successes taking place in the world of digital payments. I'm Elliott Gotkine, and in this episode, from chaos to playbook, why emerging markets feel so hard and why they don't have to. Here to discuss, I'm joined by not one but two of the world's doyens of digital payments, Boku CEO Stuart Neal and dLocal CEO Pedro Arnt. Hello to you both.
Hi Elliott.
Hello Elliott. Great. Good to be here.
Excellent. All right, so look, before we get cracking in earnest, and for listeners who don't live and breathe payments, tell us in one sentence, what do Boku and dLocal actually do?
So Boku is a global payments company. We aggregate all around the world what we refer to as local payment methods. We do that in 70 countries, primarily to serve some of the world's largest tech giants.
Okay, and Pedro?
We do something very similar. We solve the challenges of financial infrastructure for global merchants expanding into the emerging world.
Okay, and so if you do similar things, I mean, do you collaborate? Are you friends? Are you enemies? Are you frenemies? How does it work?
I'd say we are frenemies, aren't we, Pedro? We occasionally bump into each other. I think Boku has more of a bias to the east, Asia Pacific, where we're particularly strong. Pedro, I guess you're more LATAM, and then we sort of meet sometimes in the middle.
I think that's well said. There's an interesting, I think, complementary set of solutions that are also a consequence of where our businesses sort of originated and grew in, whereas certainly they've solved more of the Asian payments infrastructure challenges, and that's led to a specific product offering which doesn't always overlap entirely with ours, not only from a geographic perspective but also from a product perspective. But increasingly I think we're both moving in each other's direction.
Well, maybe eventually we'll put you both together and we'll call you dBocal or something like that. Anyway, so look, before we discuss
dLocal.
Yeah, that could work as well. Anyway, so look, before we discuss why emerging markets needn't be so complex, it's probably worth establishing what we mean in the first place. How does complexity, quote unquote, play out on a day-to-day basis? Pedro, why don't you kick off?
Sure. There's three main elements. I think the first one is fragmentation. Whereas in the developed world, most consumers are able to pay through credit cards, and credit cards perform incredibly well. We see in the emerging world myriad different payment methods that consumers prefer: real-time payment networks, QR codes, direct carrier billing, digital wallets. So it's very fragmented, which generates complexity. The actual underlying technology, so the existing technology infrastructure, many times is legacy, it's dated, and needs significant optimization to work to the standards of global merchants. And the third piece is that it's inherently very national, and that what I mean by that is every specific country has its own regulation, and many times in typical emerging world fashion, very Byzantine regulation that takes a lot of understanding to navigate, and a lot of advocacy to improve.
Yeah, I agree with all of that, and I think, just as a build, I would say it's very easy. I mean, one of the things that the card brands have solved many years ago is this idea of one network globally. So everything is aggregated, and merchants could plug into one card acquirer and access the world. And that just doesn't happen in the world of local payment methods. And so if you're trying to expand into emerging markets where cards are not the dominant payment method, you're faced with this disaggregated, messy sort of spaghetti of, a plethora of localized payment methods. And then on top of all of that, you've got the problem of how do you then monetize. You can launch a market, but in markets where currency controls exist and it's hard to repatriate funds, if you're a US merchant, it's hard to get your dollars back. It adds just another layer of regulatory and financial complexity that doesn't exist in developed worlds.
I mean, are there any kind of friction points? I mean, I guess one would automatically assume that these are kind of, a couple of the big friction points. But I mean, what other ones would you say are the most, to paraphrase George W. Bush, misunderestimated? Are there any others that perhaps, your average person in the fintech payment space or a merchant looking to go into emerging markets would think, okay, I know that's a problem, but what wouldn't they automatically think is going to be a problem, which actually is quite a bit of a problem that, of course, you guys help resolve?
Yeah, I think there's a bit of conflict between countries that want to welcome in big global players so that their consumers can access, all of the latest sort of digital offerings, for example. But then the reality is that the ecosystem is set up to protect that country, with controls, regulation, withholding taxes, currency controls, which means it's kind of open for global business, but it's not. And so, that's where some of the friction comes in for our customers. Certainly, they're looking to expand. They're looking for countries where there are growing middle classes, big populations, people that want to use digital content. But then, the realities of doing business are far more complicated than that.
To complement, I think perhaps the biggest misunderestimation is payment seems like this very simple and commoditized part of a consumer journey. And yet, when you live payments like Stuart and I do, you realize that small little technical details, small little UI tweaks, small little understanding of how to build a payment method around a regulatory framework can lead to quite divergent outcomes for merchants. I mean, if you can solve for 4 percentage points of conversion increase, that's a massive uplift in revenue. It's literally a 4% increase in revenue. And when you start understanding that level of optimization needs to happen, not across Visa and Master, as you would in the developed world, but across 15 payment methods that consumers in Indonesia or in Ecuador might want and expect to see available at a retailer's checkout, it begins to shed increased light on how much complexity there is that companies like ours solve, and why the most sophisticated global technology companies, right, who happen to be our clients and who solve. These guys are building general artificial intelligence, and yet they can't solve payments in the Philippines. And the answer kind of is, well, that's how complex payments in the Philippines are, and they're quite busy building general artificial intelligence. So they're quite fine having to abstract away that complexity by integrating into platforms such as ours.
Yeah, 100% agree.
And I mean, you said obviously, the kind of I think we assume that the payment journey, if you like, for the consumer at least is very, very simple. But I assume it's obviously it's quite different in the developed and certain emerging markets. Can you just give us a sense of the difference? Like here, I would just go with my Apple Pay, whatever, paid, that's it, connects to my credit card, job done. I mean, how is the experience in developed markets and also China when it comes to fintech and payments? How is that experience different from how a consumer would be paying at checkout, for example, in Nigeria or Indonesia?
Yeah, I mean, I can have a stab at that. Look, I think it's a question I have a lot of fun with when I go to North America, and I try and explain to people there that there's a whole piece of the world that are not using plastic cards, and the concept just blows their mind, because everyone in North America is wedded to their Amex points that they're getting on their plastic card, for example. I think the experience, ironically, and if you go to Singapore, or you go to Indonesia, or you go to some of these markets, everything is very mobile native. And so they've kind of leapfrogged 50 or 60 years of development in payments and gone straight to a kind of mobile-centric ecosystem where they're running their lives through mega apps, they're buying their food, they're calling their Uber, they are, getting their work done, they're buying financial services all through one shop window, which is a global, is a kind of mega app ecosystem. And they're paying in the same way, they're using their wallets, they're scanning QR codes, everything is very slick to the consumer. The one thing that they have therefore struggled with, however, is access to global goods and global services, because that connectivity is just that much more complicated. But I would say the technology and the UX of it all has leapfrogged. We're here busy in the West loading our plastic cards into Apple Pay, right, to make our phone behave like a card. They've completely leapfrogged that.
Right. I think that's certainly the case with Asia, which is what makes Asia potentially the most interesting market. But then there are other parts of the world. For example, if we look at some of the work we do in Africa or Latin America, where you go to the other extreme, where we're trying to help merchants. And if that was blowing their minds, you can only imagine when you explain to them that to sell their digital good, they're actually going to have to figure out how to collect in cash. But that is the reality of some of these markets where the digitization of payments is still a few steps behind. And if you're unwilling to collect in cash, you're essentially locking yourself out from a not insignificant portion of the population. And equally important to us in terms of a mission statement, that portion of the population is being locked out, and the digital divide is only being made worse. So you have to solve, and it really goes back to the different payment methods that exist. You need to solve that journey that you asked about, Elliott, for a cash payment, for a digital good, which is a solve that is absolutely different to the solve for what Stuart just mentioned, which is for a super app, or if it's in Kenya for M-Pesa on mobile money, or if it's for Pix in Brazil. Each of these payment infrastructures have inherently different consumer journeys attached to them, and you need to solve for each one of those.
Yeah, really interesting how there are still issues of relating to cash that still need to be resolved, or perhaps even more so now that the whole world has gone digital and cash obviously hasn't, at least, and what we can have a little mention a cameo of stable coins later on when we get further into this discussion. But I mean, you've both obviously scaled across very different regions, sometimes I think, as you said, kind of overlapping somewhat in the middle. I mean, what for each of you, be really interesting to know, what for each of you has been the hardest market to crack? I would say culturally, but I suppose technically as well. I would imagine technically some of the problems are similar in emerging markets in terms of communications and accessibility and kind of also educating the population on how to use these things and whatever. But I mean, in terms of culturally, do you find some markets harder than others? What's been the toughest nut to crack, Pedro?
Look, I tend to think that I'm a globalist by nature, and I think that the differences in culture and consumer approach, especially to online usage, I don't want to say they're all the same, because they're not, but I think the similarities far outweigh the differences. And that's why companies like ours have been able to emerge. You didn't have this category in the past of an emerging world global company. It's not really global. We don't do any business, we don't at least, in the developed world, but we do cover the entire global south. And that was quite unheard of in the past. The reason for that is that many of the consumer demands and use cases are quite similar across the global south when it comes to payments. So the toughest markets for us to crack, and I didn't mean by that there aren't markets that are tough to crack. There are markets that are extremely tough to crack, will be, I think, a consequence of two things. First of all, just extremely difficult regulatory environments, either an absolute lack of regulation, and so you really need to work with the regulator to not run afoul, or excessively, as I mentioned before, Byzantine regulations, which micromanage everything to a point of extreme complexity. So that's one of the tough nuts to crack, right? How
and where was hardest, Pedro? Or are you being diplomatic?
You mean in terms of which countries? Oh,
Yeah,
I mean
which
the countries with capital controls, the Argentinas, the Egypts, the Nigerias of the world, typically because of the strict capital controls, tend to mean you need to be extremely careful in how you build the solutions for these merchants across those markets. And then the other piece is just some of these markets also, the financial infrastructure continues to be extremely poor. I mean, I think doing payouts in Nicaragua is extremely challenging, and a large part of that is just the state of play of the infrastructure there.
Okay. Stu, I see you nodding there.
Yeah, I would agree. I think I think there are two layers to it for me. One is in markets where regulation exists, it's working with that regulation, and it's slow. You take markets like India, for example, a brilliant market, absolutely on fire in terms of e-commerce and global trade, but getting regulated and then maintaining that bar to the specific requirements of the Reserve Bank there is incredibly tough, right? And so you work very hard to get your license, and you work even harder to maintain it. But that's the price of doing kind of global trade into India. And then in other markets, as Pedro alluded to, I think Egypt's a good example. I think Nigeria is a good example where you are kind of guessing a bit, when you build your solution on the basis of a conversation and directionally where you think the market's going to go from a regulation point of view, and then tomorrow it can change. So you've got the kind of triple kind of problem of building to kind of different technologies of all the different varying payment types within the market. Then you've got to worry about liquidity and how you get your money out of the country, and all of that, underpinned by a, maybe a little bit immature regulatory environment that's just trying to get its head around how that country participates in global trade, particularly in the sort of digital space.
But if you are dealing with these countries that have, let's say, capital controls, whether it was Argentina or Nigeria or Egypt or others, and yet you still seem to be kind of going into those markets. So I'm just wondering, do you ever come across markets, and just think, it's just not worth the hassle? Does that happen, or do you just always find a way? Because if it's not worth the hassle for you, it's not worth the hassle for anyone else, which presumably makes it not an easier, but perhaps a more lucrative opportunity if you want to get in, then you've effectively got a moat around you because no one else will be bothered.
Two quick thoughts on that, and then I'll hand it over to Stuart. So I think we tend to be driven by where our merchants need a solution. And we tend to look at these global client contracts, right? So if I'm asked by a merchant that's working with me across 25 other regions, can you figure out Burkina Faso for me? I'm extremely incentivized to figure out Burkina Faso. I can price it accordingly, but more importantly, I have another 25 markets. I wouldn't say at risk, but that will benefit from going that extra mile on behalf of our merchants. So many of the markets that we've expanded into and that we continue to expand into, it's quite amusing to see new hires that where's the business plan? How on earth are we justifying Uzbekistan? And the answer typically is you can't look at Uzbekistan standalone. You need to understand what's the global contract that's pushing us towards Uzbekistan. And the other thing that comes to mind in terms of doing or not doing it, for example, Stuart's approach to India, and I think he's probably right over the long term, was if you want to do India well, you need to go all in and you need to be licensed. I think we've still taken somewhat of a more light touch approach where we've looked for licensed partners in India and we try to work through them. So we share the pie, we don't keep all of it, but because, as he well put it, I can only imagine what it was like to go through that regulatory approval process, right? So then sometimes it's not binary of do I do it or do I not do it, but you start finding alternative models in which maybe a market will make more sense given the amount of demand that you're seeing for that market within your pipeline.
Yeah, I think that's fair. The only build I would have is, you choose your lane as a company and where you think you can add the most value. Do we want to be the 15th provider of open banking solutions in Europe where people are fighting over basis points? Really that's a scale game for others to kind of worry about. we kind of focus on solving the harder problems because we think there's more longevity in it and more value we can add, and it becomes less of a pure technical plumbing role and more of a how do you facilitate global commerce, and that comes from having a portfolio of technology but also licensing, regulatory footprint, banking footprint, and those things. When I get challenged on this by investors who think that Claude's going to eat my business, I would push that back and say, well, how is Claude going to replicate a network of regulatory infrastructure? So, we're solving hard problems for our merchants, exactly as Pedro articulated, by taking them into new areas of growth, which means it's less about a pricing war, how cheap can you do it, and more about how fast can you help us grow, and that's where we feel more comfortable.
Well, while we're still on the subject of the challenges, kind of, and I guess the chaos, quote unquote, and the complexities of going into these emerging markets. I mean, perhaps you can give us a nice anecdote here, each of you. What's been the kind of biggest surprise, pleasant or otherwise, that you've encountered when entering a new market?
Go on then. This is a tricky one. But I think, I guess from our experience, we have tried to go about things in the right way and tried to engage with regulators as we've gone. Most of our business, probably north of 80%, is in the mature north, if you want to call it that. So that's the sort of model that we're trying to take into some of these emerging markets. It means some of them might be very slow to move. But what I do sense on the positive side is that there's general willingness to engage and to the types of customers we're bringing to the country are adding value, and they want their consumers to be able to access. And so there is an open dialogue, and there is typically a pragmatic way through. It doesn't necessarily happen as fast as we might always want it to, but it does mean that it's likely to change over time.
So you're going to tell us what your biggest surprise, pleasant or otherwise, was when going into a particular market?
I just think that the access to be able to get to the central bank governors to have a frank and honest conversation about what you're trying to do in their country, I think is refreshing. It was relatively easy and constructive.
All right, Pedro,
I think for us, because I'll let him think about it. I'll throw in, I don't know how juicy mine is, but it's specific at least. I think what's been fascinating over the last 3 years has been the emergence of Pix in Brazil. So if you look at dLocal's history, dLocal started, and literally the first payment method it offered was something called a boleto in Brazil, which is you would print out this invoice, you would go to the bank teller, you would give him the invoice in cash. And dLocal solved that for companies, and that was the genesis of the business. But I think somewhat unlike Boku, very quickly dLocal realized that credit cards still was where most of the volume was. And so it developed a traditional payfac for credit cards. And that became the majority of our volume. And then about 3 or 4 years ago, we began to see Pix picking up. And Pix is this central bank Brazilian real-time network where money just moves instantly at almost no cost from one mobile phone to the next mobile phone. And we thought, this is interesting, but central banks have tried this everywhere. UPI in India is the only one that's worked. And then it just absolutely took off. I mean, people tip the boy that looked after your car when you parked through Pix, and it's just exploded. And it's probably the most significant product we sell today to our global merchants. And I think it's fascinating because it's absolutely exceeded our expectations in terms of how quickly it's become widespread. It confirms the thesis that payments are moving from what was once a somewhat global standard of Visa and MasterCard to very localized standards. And it's happening and it's tipping quicker than maybe some are realizing. And now you see everyone and every single central bank we engage with on the verge of launching their own version of Pix, or have already launched it and are rebranding it or trying to push it. So we're going to see a very, very rapid, I think, takeoff of these local payment methods, which have always been the underlying thesis of why our companies exist.
Hence the name. Of course, things could change tomorrow, so I don't want to go into specifics of where we are right now in terms of everything going on. But I mean, it's clearly been on people's minds. What have you seen in terms of payment flows? Have you seen kind of remittances, if that's something that your companies deal with? Have you seen them kind of trailing off as people have been unable to, or have lost their jobs or anything else like that? Have you seen any impact whatsoever? Stuart, why don't you start?
Just two comments really for me. One is one's a comment, one's an anecdote. So we haven't really seen our business tends to be a little bit counter-cyclical in that what we've seen as a trend over time is that when times get tough, the last thing people do is cancel their digital subscriptions. When you're locked down at home, and we have staff unfortunately locked in at home in Dubai and places in the Middle East right now, they're watching Netflix and they're listening to Spotify and they're downloading digital content. Obviously other content providers are available. So we actually see it's been quite resilient, and we haven't seen a massive change in traffic. What I thought was really interesting though was I was in Singapore for the FinTech Festival in November, and I got invited to a central bank governor's lunch.
Nice.
Not sure why me, but I was grateful to go. And it was an aircraft hangar-sized room full of central bank governors from all over the world. And the main topic of conversation was the concern they all shared around, US-denominated stable coins flooding the world. And the race was on for all of these central bank governors to issue their own digital coins and insert regulations to prevent capital flight and losing control of their economies. And so I think, in terms of direction of travel, I think this one is going to get very, very interesting.
Can I jump in there? And because it was one of my answers. And it's not just the stablecoin issue. I think it's been interesting to me how in our conversations with central bankers, I think some of this was triggered by Russia, right? In the early stages of the U.S. sanction imposition, one of the things that they did is, Visa and MasterCard will retreat from Russian, and that will cripple the Russian payment systems. Now, the Russians had built an own local card scheme that I think turned out to be more resilient than was anticipated. But, and I'm making zero judgment of whose side to be on. I'm being careful here. But the weaponization of the existing payments infrastructure, when it's not your own, is something that is extremely scary to central bankers. And so you've seen not only with stable coins this increased awareness, but you've seen clear increased awareness around how do we make sure that we control the essential payment pipes for our economy so that we cannot have whoever is controlling that weaponized under us in this much less multilateral world that we're moving into. The second thought in terms of flows that has been, it's geopolitical driven. I think it's a little bit less the current Middle Eastern conflict, but trade war. And we clearly did see an increase in focus, volume, and market expansion into LATAM, into Africa, from primarily some of the Asian global players once the trade wars were ignited and they realized that their access to US or European markets, if not entirely restricted, were clearly going to be more complex than what the original business plans had outlined. And so at that point, it was clear for us how significantly demand picked up for markets outside of the US, which was a consequence of a reallocation of capital that was going on strategically by those Asian players.
Okay. Well, I don't want to go down too much down the stablecoin rabbit hole, because there's two things there, whether it's stablecoins or currency sovereignty, which I would imagine would make for a wonderful standalone conversation. So I'm going to kind of, just move on to the last kind of couple of sections and try and do so as concisely as possible. When we look at competition and positioning, you've got massive companies, in the payment space, bigger, with the greatest respect, many times bigger than both of you, whether it's Stripe or Adyen or PayPal, all pushing globally. Why don't they just win everywhere? Why is there still space for you guys to, not only survive but thrive? Stuart?
From my experience, I think they, a lot of these companies were born to do one thing incredibly well, and they've scaled up. It's super impressive. You look at a Stripe or an Adyen, they've picked a lane and they've executed incredibly well. So, respect to them for that. What I've seen is a sort of lack of willingness to engage with the sheer messiness of dealing with, local payment methods all over the world, the disaggregation we've talked about, the lack of standardized technology, the lack of standardized settlement and money flow. I think at their size now, there is a kind of cost benefit for them that doesn't work. And if you think about Adyen, right, they're doing $1 billion of revenue with a kind of expectation to grow 20%. So they've got to find 200 million of additional revenue every single year, and they're going to put their bets very carefully. And if they're going to try and get into our space and devote a chunk of their engineering resources to doing, what is by definition very kind of messy emerging market business, I think it's quite risky for them. They're far more prone to working with partners who have already built those rails. That's my take.
Okay. And Pedro, you concur?
Fully agree.
Okay.
I think, but just the only thing I'd add, because that's the explanation, it's not just that these markets have become not needle moving for them and that they're messy, and so but it's also that's not what they're equipped for. Like, these companies are built, I think, to solve through technology with a vertical integration. They're almost religious about that. You're not going to solve direct carrier billing in Japan unless you're willing to engage with the owner of the direct carrier billing, which is the telco. So you can't really just build code your way through solving these problems. These problems have a more inherently operational, feet on the ground nature to them, and interaction with partners than simply, I build the better technology. So when I look at how a Boku or a dLocal, their DNA and how they're structured and what their key success factors are and what they've gotten good at, a lot of that is working with someone else's technology stack. Whereas I think the really successful developed world ones, the Adyens and the Stripes, what they have all been about is the legacy stacks are horrendous. I've built this pure next gen stack, and that's been my key success factor. That doesn't port as well to the developed world. Now, we're both hoping that this isn't Steve Ballmer saying the iPhone will never go anywhere 20 years ago, right? But I really don't see them designed for success across emerging and frontier markets.
Okay. So look, before we finish, obviously with plenty of food for thought, whether it's to do with stable coins or artificial intelligence. We haven't even scratched the surface on those topics. But before we go, I just want to get from you, and maybe stable coins and AI is part of this, but what keeps you both up at night? Is it in terms of your work? Obviously, there may be noisy neighbours as well. But what keeps you up at night? Is it regulation? Is it fraud? Is it competition? Is it stable coins? Is it AI? What do you kind of go to bed worrying about and thinking this is something I need to get a handle on? Stuart.
Outside of the public markets, which is another podcast in its own right, I'm sure. But I guess most CEOs would worry about being on the wrong end of some kind of hack. I think those things, if you happen to be in the sights of some, sponsored attack, there's really not much you can do about it, even though we spend time and effort and resources making sure our defenses are as good as they can be. That's still something that is in the back of your mind. And I guess adverse changes to regulation might be one. I think we're pretty protected, but the world is unpredictable. Broadly speaking, I'm pretty excited by all the new technology, so I worry less about that.
Okay, otherwise, if there were any more things, Stuart, I'd worry that you weren't getting enough sleep. Pedro.
So Olivia is now 2.5 and still makes her nightly, I should say, pilgrimage to mommy and daddy's bed. So that's really what keeps me up at night. But on a less literal sense, it's a bit navel gazing, but genuinely it's our own execution. It's, if we execute well across these very complex problems, if our team in Pakistan is solving what needs to be solved, and the South Africa team is engaged correctly with the new buy now pay later provider that we think has enormous potential to help our merchants increase 15 percentage points of conversion on that buy now pay later. If we do that consistently across the globe, the size of the opportunity is so massive. I mean, growth is moving to the emerging world, and payments in the emerging world are moving away from credit cards. And we are smack at the intersection of those two massive secular trends. Then you overlay that with the demographics of the emerging world, and the investment thesis is just quite crystal clear. But where it all breaks down is, can we execute well enough to be one of the players that will capture that? And that's by far what I spend most of my worry time on.
Okay, well, as they say, problem shared is a problem halved. So perhaps when dLocal and Boku get together as Glocal or dLocal, then you'll have less to worry about. But I'm afraid we are out of time for this conversation. So I really just want to thank both of you, Boku CEO Stuart Neal and dLocal CEO Pedro Arnt. Really appreciate your both taking the time to join me today.
Thanks, Elliott. You're welcome.
Thank you very much.
And for everyone watching or listening, you have been listening to the FinTech podcast with me, Elliott Gotkine. If you like what you heard, you can subscribe wherever you get your podcasts. And if you can, do leave us a nice rating and review. And you can also listen to all previous episodes of the FinTech podcast via the website, fintech.com. That's with hyphens in the middle. And if you've got any comments, suggestions or feedback, you can find us on X and Instagram. That's it from me. We will be back again next time with more of the best F in tech. Hope you can join us again then. Thank you very much. Bye-bye.